Danielle DeMarco. She's going to give a mortgage market update. Danielle, if you want to come in, for the people in this room, I'm just going to have to turn up the volume. You'll be able to see here on the screen here.
All right. Thanks, guys. Okay, so what I kind of wanted to chat about tonight goes hand in hand with obviously having the tax accountant presenting. So January of every single year, January and February, whenever we're dealing with any home buyers or anybody that owns a home and wants to refinance, if you're self-employed, it's really a critical time of the year to be in contact not only with your accountant, but also with your mortgage broker. And accountants and mortgage brokers work really well hand in hand. So making sure that what you're claiming on your last year's income taxes, so that'd be 2023, is enough to continue to qualify for mortgage financing and investing in real estate. What happens is I'm self-employed. I get it. Sometimes we like to write our income down pretty low. That, on the other hand, when we're trying to qualify for a mortgage, is not helpful because the lenders really want to look at your last 2 years of income tax returns. Yes, there's other alternatives and other options with alternate lenders, higher rates with fees and things like that. But if we want to try and long-term invest in real estate, then we need to be kind of sacrificing in some areas. And one of that areas tends to be our taxes. So owing the tax man a little bit more than sometimes we want to in order to qualify. So what I love to do is review your income, take a full application, see what do we want to be qualifying for immediately, but also what do we want to be qualifying for in the next couple of years. And then we work it backward to see what income we should be claiming. But then we take it one step further. I'll break it down for you. And then you take that to your accountant. And your accountant will review that and have a conversation with you about, okay, if we're needing to claim this much, this is the tax implications, what you're going to owe in taxes. And then you can decide with myself and your accountant, okay, does it make sense to be claiming this much? Should we be claiming a little bit less? Should we spread this out over a couple of years? We've seen it where someone claims really, really low, let's say in 2022, and then all of a sudden extremely high the next year. Well, it's still an average. So sometimes claiming that high, paying that much in income taxes isn't worth it, but claiming a little bit more in 2022 or 2023, and then a little bit more again the following year, and then getting on that investment journey down the road sometimes makes more sense. So really, it's completely based on the individual. It's based on your application, what your goals are for investing, what your gross revenues are that you earned as a self-employed person. And then again, recapping, regrouping with the accountant to make sure that the decisions that you're making for financing make sense from the accounting side of things. So for anybody that's self-employed or knows someone that's self-employed that wants to continue or get started in real estate investing, January and February are really critical because we're getting into the tax planning time and starting to have to file those personal income taxes. So we really want to be having these conversations so that you're not coming 6-8 months down the road wanting to purchase and, not having claimed enough income. So something to keep in mind as a real estate investor. And for any of those people out there who are T4 employees right now, but are thinking of incorporating or becoming self-employed or becoming a contractor, reach out as well, because it's really critical that we plan and talk about what does that look like for taxes, but also what does that look like for employment and timeline for investing, and what type of history do lenders need when you're self-employed. So that's my kind of info on the day because we have our accountant here. But yes, we work hand in hand. It's really important to have a full team, not just a mortgage broker, not just a real estate agent, but also an accountant that can help you plan as well.
Awesome. Thanks, Danielle.
Oh, you're welcome.
Okay.
Awesome. So if anyone's thinking of investing in real estate, the first step is always to contact a mortgage broker. We always refer our clients to Danielle. She's been working with this team for over 20 years and she knows the investment game. That is always the first step because we've got to understand where you're at financially. And if you can't get a mortgage, that's not the end of it. We have other strategies to help people move forward with investing in real estate.